Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me to a new week. Well, it was a very volatile week after the US Federal Reserve has stepped up its fight against the 40-year high inflation after announcing last Wednesday its fourth consecutive three-quarter percentage point hike in interest rates to a target of 3.75% to 4%, its highest level since 15 years. Following that, on Friday, the much anticipated US jobs growth increased more than expected in October after the US job numbers, or the non-farm payrolls, added 261,000 jobs in October, above the market's estimate of 197,000 gain. While job additions for September was revised up by 52,000 from 263,000 to 315. That is, the US Labor Department announced earlier. While the reading was better than expected, it marked the lowest pace of job gains since December 2020, which could allow the US Federal Reserve to shift its smaller anticipated interest rate hike in December. That means we could see a drop from 75 basis points to 50. Along with that, the unemployment rate rose by 3.7% from 3.5 in September, above the forecast of 3.6. While the unemployment was slightly higher, the average hourly earnings increased by 0.4% after rising from 0.3. Following the US job data, the US dollar index, which measures the greenback strength against a basket of six major currencies, plummeted nearly 2% to 110.66 after changing hands in a weekly range of 113.02 to 110.58. From the weaker dollar, the market right across the board has improved. And looking at the Australian dollar, the bearish bias reversed very aggressively and took out nearly 5 days of price action. And from the close, around that 64.40 area, has put a bit of a brighter prospect in the top side challenge now to around 65 to 66 cents. After the bearish engulfing candle has been negated. Technically, we are bullish with the RSI back above the midway point. So let's see if the market can improve to the start of this week and therefore could see a weaker US dollar. The euro also surged after taking out at least nearly 3 days price action here. And from that, the market is a little bit more on the brighter side and therefore could see further gains after rebounding in front of the level around 96.65 to 97. And now looks towards the region of 99.80 as initial target, or maybe even to 01 or 03. Still, keep an eye on the technicals because the MACD is a little bit weaker, and therefore the initial gains that we witnessed on Friday, it may see a little bit of a weaker pullback to the start of this week. But overall, if this pattern continues to strengthen, then we should see that gain towards 101. Although the markets were very whipsaw, the dollar yen is still somewhat lackluster, but nevertheless technically weak. And therefore I do feel that the bearishness should continue after the retreat from 148.25.45 now tackles the level around or close to 146.60.65. In light of the bearish call that I gave last week, I still view down towards 145.65.85 and may even look towards this level around 143 and reassess. Pound was a little bit more to the improvement side to the bullish case, but nevertheless the technicals are not fully convincing, unlike looking at the Aussie and the Euro. Still though, I like the way this pattern is slowly unfolding and therefore could see a rise up towards that region looking at 114.50. A break there would give further scope on towards 117 and 118. But like I said, I would like to see the technicals to improve to give that call. Otherwise, we may dwindle all the way back down to 109 before the big rally that's initially I expect to emerge. A very strong move in gold after the recent challenges to the bottom side of the range around 1,621. Stages a strong rally, breaks through the level of 1,666 and closes above there, which has put further sight to the upside, that is towards 1,691 as initial target, and reassess. I am very, very cautious though of the bullish call after the many attempts where we've seen going back to at least early September have failed. As you can see here, we've got a very strong drop in the beginning of September and another strong drop as well, and therefore could see further risk that is towards the downside. But initially though, for the start of this week, we could see a slight improvement, and as I mentioned, up towards that top side, anywhere from 1,680 to 1,690, and then maybe another drop back to the bottom side of the range. The call to the upside was reached for oil after looking at the target of around, first of all, at 90.5, and then 92 was reached, and then the market has opened weaker this morning to some surprise. In light of the pattern though, if we do see a break of 89.50, then we could see a further weaker play back towards $84 a barrel. But until then, keep an eye on that level, as while intact, could see one more attempt to that 92 before seeing a rejection, because it is a key point, as we can see here. Well, that wraps it for the start of this morning. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the new week.